Now, Asian stocks rebound after their worst day on record, but Chinese shares look set for another rough start due to the ongoing trade spat. On Black Monday, waves of volatility shook markets anew. Stocks, bonds and commodities were whipsawed by another deluge of headlines around President Trump's trade war that only reinforced the clouds hanging over the outlook for investors. But early on Tuesday, shares in Japan and Australia advanced at the open along with future contracts for US and European stocks. Contracts for Hong Kong pointed to losses after a gauge of US-listed Chinese shares fell more than 5%. Now, this came after Trump threatened to slap additional 50% tariffs on China for its retaliatory stance. Traders looking for stocks to bottom after a sell-off of trillions of dollars were faced with a series of twists and turns on Monday. While the S&P 500 moved away from the threshold of a bear market, its 7% intraday swing was the biggest since 2020 when COVID hit global trading. Many metrics are at panic levels associated with meaningful bottoms over the past 40 years. Hedge funds recorded their largest ever one-day net sales of global stocks. The slump has taken U.S. stock valuations to the lowest level since late 2023. And amidst the global sell-off, the U.S. stock market had a manic Monday. At just after 10 a.m. U.S. time, fake news erupted that Trump was weighing a suspension of tariffs. Now, within seconds, stocks soared wildly, erasing all of Monday morning's loss. The S&P 500 climbed as much as 3.4%. As stocks started to surge, the S&P added over $2.5 trillion in value within 7 minutes. Still, even after the White House denied the report and stocks gave back their gains, the selling fever subsided. Now, stocks remained well above their Monday lows. The episode served as a reminder that it does not take much to spark a sudden rally. That was the 15 minutes that rocked stock markets' desks. Volatility convulsed other markets as well, with traders continuing to price in a high risk of global recession. The VIX index, known as the fear gauge, spiked to hold a pandemic-era level. The brief halt to the U.S. stock sell-off, however, was a welcome respite after markets slid around the world. China was particularly hard hit when the Hang Seng index falling 13%, its biggest slide since 1997. Europe's main gauge plunged to the lowest since December 2023, and Germany's DAX index briefly sank 10% before recovering. And for more on this, we're now being joined by Amit Pabari, founder and MD of CR Forex, live from Mumbai. Thank you so much for joining us on World Business Watch.
Pleasure is mine. Thank you.
Now, Trump's tariffs, all anyone can talk about. Do you see that breaking the dollar?
Tariffs are not new in US. Similar thing happened in 1930 also, where the US put 25% tariff on all imported goods which are coming into the country. What was the result? 66% reduction in world trade between 1929 to 1934, and US went into a recession. So basically, we think that Trump, apart from the Trump tariff policy and his economic policy and foreign policy, that will lead to only one thing, that is weaker dollar for the coming days.
Right. And with markets now recovering in Asia, will we see a substantial rebound, or will it turn more volatile as it goes forward?
When there's a Trump era, we cannot expect market to not to be volatile. If we take yesterday's example, in 15 minutes, based on a particular news that Trump will extend, tariff after 90 days to some countries except China, the markets went couple of percentage points up and down. So markets will remain volatile for coming days. But one thing is sure, that we have to be underweight on US assets. So we are telling our clients not to invest in US equity market, and dollar index, which is currently trading where 103 kind of a level, is going to face tough resistance near 105 kind of a level, and probably by the end of the year we can see below 100 towards 99 or 98 kind of a level.
Now, that being said, what should investors do amidst this market mayhem?
So basically, one line what I tell to all my clients is that you have to hedge and plan your portfolio well, because volatility is going to be there. That is the first thing. Second thing is that stay light on US dollar or US related assets, because we are going to fall down. Markets do not like uncertainty, unpredictability, and the trust issue. These are the three areas which market will look. And currently, US is uncertain, unpredictable, and there is a question mark on the trust about policies of Trump. These are all giving us an indication that we have to be lighter on dollar and US equity market.
All right. Well, Mr. Amit Papari, thank you so much for joining us on World Business Watch with your insights on this.
Pleasure is mine. Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.